Hi, I'm Radzinski, speaker, educator, and expert in corporate responsibility and sustainable product design. Thank you for joining us today. We have a new series for the month of October, Recognizing Risks, Identifying Opportunities, Succeeding in the Green Marketplace. Today I'm going to be talking about the cost of carbon. As we discussed in our previous blog series, we emit huge amounts of carbon as a society. We heavily rely on combustion for generating electricity. We use in our automobiles, planes, trains, or combusting various fossil fuels. And as we know, we've now exceeded CO2 emissions in the atmosphere over 400 parts per million. So we are definitely altering the carbon cycle. Through our normal processes of producing energy and manufacturing goods and basically creating steam and different things that we do, we're basically altering the carbon cycle and having an effect on climate and various other issues that are related to this. One thing to think about, though, as an organization, many people don't have this on their radar. What if there was suddenly a carbon tax and your organization was responsible for paying a fee for every metric ton of carbon that you generated? This has happened in Australia. I know China right now is instituting a carbon tax. There's some of the states like California are evaluating this. Even some organizations like Microsoft have integrated an internal carbon tax where they basically measure the energy consumption by different business units, and then they're responsible for paying a fee for every ton of carbon their business unit is responsible for. So imagine if you're an organization that is manufacturing something, or you're a large service organization with many buildings and many employees, and you measure your carbon footprint, and it comes out to be 10,000 metric tons of carbon CO2 equivalent a year. And if the tax was $25 a ton, which is the same thing that Australians are paying, you would be responsible for over $250,000 a year in taxes. So the big question is, what would that mean to your bottom line? What can you do to minimize that risk to your organization? And how would you absorb something like that? So really very important to understand your carbon footprint. And what I'm going to tell you now is how you can measure and understand your carbon footprint in your organization. Okay, so the first thing you need to do as an organization is measure and understand your carbon footprint so you can really know what your risk could be in the future if there were a carbon tax. First step to that is benchmarking and measurement. You need to understand all the electricity you use as an organization. You need to understand the fuels you use and are burning within your facilities. If it's natural gas, fuel oil, propane, different things like that you'll account for. Once you have that information, you basically take that and put it into spreadsheets. So you'll list all your energy use for a year, both electricity and fuels. And then what you're going to do is evaluate how you're going to run your calculations to determine your carbon footprint. There are standards out there that need to be followed. Number one is the greenhouse gas protocols. Greenhouse gas protocols are guidance on how you basically collect information about your carbon footprint and then how you would run the calculations. ISO standard 14064 has 3 parts. It gives you clear guidance on how you basically collect the information about your carbon footprint and then how you run the calculations and how you evaluate it. You also need to know the EPA emission factors for various fuels. For example, if you're burning natural gas, you would follow an EPA emission factor to calculate the CO2 equivalent emissions that would come off of every MMBTU of fuel that you would burn. So these are all posted online, and you can definitely find information about these. The other thing you're going to be looking at, as I mentioned, we are looking at what we call direct emissions and indirect emissions. Direct emissions are going to be any fuels you burn on your site. So let's say that you're burning natural gas in your rooftop units for heating a building, or you're burning fuel oil in a boiler to make steam. That's definitely fuels you want to capture as direct emissions because you're combusting them on site. Also, any vehicles that you use on site, whether it's forklifts or trucks, or if you have cars that you're running around with on your site, you definitely want to capture that under direct emissions. The next thing we're going to talk about is indirect emissions. Indirect emissions are the electricity that you use, and they're called indirect because you're not typically generating that electricity. It's generated by an electric utility, comes out over the grid, and then comes into your facility, and you're basically using that electricity. So you, as an organization, are not directly responsible for the source that produced that electricity. So if you have an electric utility that supplies that, they're responsible for the generation of that electricity, and they'd be counting that under their direct. So you're basically getting indirect emissions from the electricity you use. And depending on what area of the country you're in, you would get your carbon factors, your emission factors, based on the grid mix. The US EPA presents, or basically publishes, a document or a map called eGrid. It's based on the average grid mix in different areas. As you can see on this map here, depending on what location you're in within the country, you can basically find your location geographically and then correlate that to this table, and that'll give you your carbon factor. So for every kilowatt hour of electricity you use, you multiply that by this factor to tell you what your CO2 equivalent emissions are for that electricity. So again, really important. And what's going to be interesting is, depending on your grid mix, that could affect your carbon factor significantly. As you can see, some of these numbers are higher or lower. Lower numbers mean that's probably a grid mix that has either a lot of nuclear power or hydropower. The higher the number means there's a lot of fossil fuels being burned, usually coal. So again, wherever your location is going to affect your carbon footprint. Next thing we'll talk about is Scope 3 emissions. This is something that's not really being tracked by many groups yet, many organizations. However, it is up and coming, and that covers things like business travel, employee commuting, your supply chain. Companies like Walmart and Target and other organizations are starting to ask their suppliers for information, basically having them report to the Carbon Disclosure Project and different things like that. And that gives Walmart and companies like Target the ability to understand what they're responsible for as far as their supply chain. And that's the whole point of any organization that reports to CDP at the request of Walmart. That's so they can basically track their Scope 3 emissions. But you as an organization can do that. For carbon footprinting purposes and carbon taxes, you would be most likely only taxed on Scope 1 and Scope 2 emissions. So that's why it's really important to measure those first. Scope 3 can come later as you mature your corporate responsibility program. So definitely keep in mind that this is an important step to do. Benchmark, follow the standards, understand your Scope 1 and Scope 2 emissions, multiply it by your carbon factors and determine your overall carbon footprint. And then what you'll do is basically understand how many metric tons of CO2 equivalent you're responsible for as an organization. Then you'll know in the future, if there would be a tax, oh my gosh, we generate 10,000 tons. If it's $25, that could be $250,000 to our bottom line that we have to deal with. So keep that in mind. So I want to thank you for attending this blog, and next week we're going to be talking about navigating supply chain demands, which is a huge issue right now. There's many companies that are requiring the supply chain to report various things and to talk about their sustainability and let the company know how they are doing on a corporate responsibility setup. Also, on October 29th, we have a webinar coming up which will allow us to do a deeper dive into these topics. It'll also give you the ability to ask me questions directly, because it'll be live. We'll be able to get on, do a webinar together. We'll run through various information, and we'll have a good exchange of questions and answers. So please tune into that. And also continue to subscribe to my blog, because we definitely are sending out alerts on various activities we're doing, different events, also different seminars and things like that. So please continue to subscribe to the blog. Thank you all for the comments you've been submitting and the questions. It's been very helpful in establishing these series. And I look forward to seeing you in the near future. Thank you.